Hello, welcome back. You're watching Dukascopy TV. Time to look at the bond market as there's important news in the world's biggest economies, China and the US. Joining me to help decipher it is Jan van Gerich, global fixed income strategist at Nordea Bank. Jan, let's focus on the US first. In the last few days, we've seen 5-year notes reach their cheapest in 4 years, and 10-year notes have also dropped. Now, this is due to Fed announcements that the US economy may need a further intervention from the central bank. Are investors overestimating interest rate increases, do you think?
I would say that another driver in the past moves, of course, has been also what's been going on in Europe, meaning that the European Central Bank is signaling very clearly that more easing is ahead, and in addition to the geopolitical worries in Ukraine, have boosted the flight to safety demand to bonds. But if we look at the more specific U.S. factors, I think that the weak data that we saw earlier this year very much overestimated the weakness in the economy. I think that the underlying momentum for the U.S. economy is quite good. It would need to change materially for the Fed to deviate from its tapering course. And I think that during the course of the summer, the markets will actually become more aggressive in pricing interest rate rises in the U.S. and the Fed will have the evidence it needs by early next year to start actually tightening policy.
So you don't think investors are overestimating rates then?
No, I don't think they are. I actually think that the moves that we've seen in the past couple of months maybe overestimate the weakness in the U.S. economy. The underlying momentum is much better.
Why specifically are traders hungry for the 5-year note as opposed to the 2- and 10-year ones?
Well, the 5-year point of the curve, basically it combines the monetary policy outlook with the longer-term economic outlook. So most often, if you have a big bond rally, the 5-year sector is the one that outperforms. And then vice versa, if you have a sell-off in the bond market, then it's typically the 5-year sector that underperforms. So it basically combines the interest for the monetary policy outlook with the economic outlook. And because of its maturity, basically that the 5-year is short enough for monetary policy to have a big effect, but still long enough for the economic outlook to play a role as well.
Now, elsewhere, we've seen government bonds hit the headlines as China's local governments look like they're on the verge of being given the power to sell municipal bonds for the first time. They're hoping this will tackle mounting debt problems. But will this help to boost funding for banks, do you think?
Of course, its biggest effect will be on the local governments and their funding, and especially for transparency, because the way they are gathering funds at the moment is then via some vague, opaque instruments, or then by land sales. And then, of course, they can borrow from banks as well. So in that sense, of course, it affects the bank's funding outlook. If they don't need to refinance the local governments, then, of course, their funding needs will drop. But I would see it more as a one step in the China's reform project, something that will help tackle future crises. But it will do little to alleviate the near-term worries about the indebtedness of the local government.
Okay, following on from your comments on fiscal reform there, do you think this will be a groundbreaking move in China? And could it help to encourage greater investment in an already difficult environment?
I think it's definitely a step, and we've heard positive news coming out of China that they are serious about their reform path. The risk is that the reforms will most likely hit the economy, and we've seen the consequences of that already. So that poses risks that the reforms will actually be implemented at a slower pace than currently foreseen.
Okay, thank you for joining me today, Jan van Gerich from Nordea Bank there. That's all from me. Join me tomorrow where I'll be updating you on the latest movements of the Japanese yen. Bye-bye.